Should money be the sole source of your motivation when you start to invest in the stock market? Guys, welcome to the Independent Investor Channel. My name is Ryan. We're coming to you from New York City, New York, the Big Apple. This is an important video that I wanted to come out with for a long time. And just up until recently here, I haven't quite had my validation. I just recently got this. Money is a byproduct. And really, this is kind of speaks to the fundamental truth of how I actually feel in my heart about, the older I get and really the less that I worry about money, the more money I ended up having. And I thought about coming out with a video to try to portray to you guys as my viewing audience, as my subscribers, what the root of that. When I was in my 20s, I always thought about driving around the convertible and making millions of dollars. I learned a lot, certainly, as you can attest to that. And hopefully, when I'm speaking to a lot of my younger audience, they can kind of avoid some of those missteps and really listen to where the particular focus is, because I'm trying to address a lot on my channel about, trying to pick the perfect stock and, trying to understand when to sell that perfect stock and, how quick we can make money in the stock market. And I don't think that any of those should be your sole drivers. The hardest part to get people to really understand is to focus on something other than the money initially, because what other reason do we have to invest? We're investing for financial freedom, right? And to do so, we have to take money and we have to invest money to make more money, right? And I get that fundamental premise. I think the idea behind looking at money as more of a byproduct in the process than a primary area of focus will really help you guys keep this thing in perspective, all right? Now, is an over average amount of income necessary to achieve financial success? Absolutely not. I absolutely am against that line of thinking. And the median income in the United States is just around $51,000. I'm below median income. I don't make $51,000 a year, and I'm a single income family. I really am. For you guys out there that are making dual incomes, I applaud you. There's probably some discretionary money there within your guys' budget to start deploying on a particular program like this. But I think a misnomer or a falsehood within the financial industry is that, number one, you have to be an analyst to be an investor. Number two, investing and owning stock is for the wealthy. That is absolutely not true. And if I'm talking about, being independent and being an investor, hence the name of my channel, I really mean that for everybody. And my message really should be transcending down, to the working class people. I'm one of them. I don't come from money. I don't. Okay. And so I love to be able to speak to people who value this particular information, maybe more so than folks that have things a little bit easier, right? And I find that there's probably any number of percentage of inflow of personal income that we can devote to a program that's right for you. All right. So, do you need to have an extravagant amount of income? No, you don't. Do you need to have some money saved up? Yeah, you do, but that's just the start of it. But be honest with yourself. You don't need to be out there buying stock if you don't have a savings account, or if you've been unable to save. Maybe you're paying off a particular medical bill or whatever. Maybe you're paying off a car or waiting to pay off a car. Get those bills out of the way, and that way it'll shore up your budget to kind of put yourself to the test in that saving up of those deployable funds in the market. Do you have to have ability in the market? This is a question that also is really kind of a misnomer in the market, in that you have to be an expert. I talk to people all the time. It's nauseating to me sometimes talking to financial planners. They are extremely polished, extremely sharp at their approach. But they really want to be condescending to people and let them know that statistically they can't do it on their own, and that's just a bunch of baloney. The same stocks that I'm recommending to you guys are the same Vanguard products or ETFs that I'm recommended to you guys. it's going to be the same thing whether you enter into a managed situation or you go direct to the market. And that is what I advocate for you guys, is going direct to the market. And we have an open playing field when we go direct to the market. We don't have to, we have a lot of range of error in that we can enter into safe investments, and over time you're going to outpace what you would in a managed situation because you're directly connected to the market. And a lot of what I show you on this particular channel is how to become independent or direct investor into the market and allow you to grow your funds for you and you alone. All right. And the last thing that I want to talk about is buying into a program. And really, to come full circle on this particular video, the older that you get in life, the more you're going to rely on your program than focus on the money aspect, okay? Now, I'm not saying that you can't acknowledge where you are particularly, do a year-end review, certainly on your account, see where you are. Anybody that's been invested throughout this year is probably going to have a lot to be thankful for at the end of this year because, you know, the market has rewarded investors this year, no doubt about it. It's been the best year that I've ever seen in the market. I've been one of them. I'm making so much money right now that I'm nervous. It's making me take even more of a defensive posture because I can't stop making money in this market. It's that bananas right now, which makes me kind of recommend to you guys, when you first start investing and you're focused on entering into the stock market to make money, money will be a byproduct of the strength of the program that you put in place, okay? Now that's really, really hard to understand when you start. But I talk all the time about goal setting. I talk all the time about shoring up your budget. I talk all the time about, you know, entering into spending habits that are conducive to an overall financial health. I talk about putting emergency funds away. I talk about starting a direct self-managed Roth IRA account for yourself. That's the very best account you can start. And I don't breeze over that. I repeat it all the time because it's just the truth. It's the very best. So if you can get these programs in place and you can start to build out some of the tools that I talk about and really listen to some of the tools out there that are available on the marketplace free of charge, that if you take all those and lump them into what I consider your program and you deploy that program into the market, the byproduct of that is going to be that you make money, okay? Now, I don't want my investors out there or new investors being surprised when they make money, okay? I don't want you being surprised. Markets go up and markets go down, all right? But in an up market or a down market, the strength of your program is going to be the strength that you realize as an investor going forward, and especially as those accounts grow and accumulate over time and you kind of fine-tune that program to evolve with where you are in your particular life. Guys, thank you so much for tuning in to the Independent Investor channel. If this is your first time tuning in, subscribe to the channel. Leave your comments at the bottom if you think I've hit the mark with money as a byproduct and not focusing solely on the money aspect of it and focusing more on the program that you've put in place, and you'll start to realize that money is in fact a byproduct of that program that you've put in place. Leave your comments at the bottom and await my response to you guys. I respond in detail to everybody, as you well know. Guys, thank you so much for tuning in, and good luck in your investment future.